Good wishes to all. Welcome to Rich Dad Investor YouTube channel. This small cap chemical industry is South India's first and the largest producer of variety of terpene and paper chemicals. The company's range of products include turpentine based chemicals such as camphor, dipentine, isobonyl acetate and sodium acetate, trihydrate, gum rosin and its derivatives such as fortified rosin, ester gum, phenolic or maleic resin. This company supplies its products to various industry manufacturers like paints, paper products, ties, rubber, fragrance makers and camphor manufacturers. Incorporated in the year 1992, got its production facility at Kanchipuram, 70 kilometers from Chennai. It imports raw materials, woods of laurel tree like copper tree and pine tree. This company is facing intense competition from the domestic manufacturers as well as imports from China for its camphor and perfumery chemicals. Major domestic competitors are Mangalam Organic Limited and Camphor and Allied Products. In FY 2017, increased its production capacity. This small cap chemical company has a market cap of 400 crore. The chemical space has been key outperforming sector over the last 2 years. Like others, this small cap stock price has also gone up. Its shares are currently quoting at 895 rupees. The company's EPS is 148 rupees 80 pice. The current market price of stock discounts the EPS by a modest 6.2 times. The company's shares quote at a lower PE multiple of 6.2 times compared to the industry average PE multiple of 25.98 times. The yearly high and low price range of share is 366 1,365 rupees. Current stock price of 895 quotes 2.44 times of book value and 2.20 times of sales. The company is a zero debt company. It has cash and cash equivalents 55.89 crores as on 31st March 2021. This company got a sound operating profit margin of about 44% in FY21. Return of equity is very high at 50.40%. Present dividend yield is modest at 0.45%. The company is highly fluctuating. It was 12% in FY 2014, only to decline to 4% in FY 2015. Since FY 2015, OPM has been increasing and has reached 44% in FY 2021. Such a fluctuating pattern of profitability indicates that the company lacks the ability to pass on the changes in its raw material costs to its customers. Company's profitability is highly sensitive to its raw material prices. This company is facing weak pricing power in its business as its key products, camphor and its derivatives are simple commodity type products and face a lot of competition. The major raw material is distilled from tree produce and which is subject to weather condition and natural calamities. Financials. It's growing. The company's name is Kanchipuram Limited. Share price graph for last 5 years. March 2017 57 rupees. March 2018 257 rupees. March 2019 374 rupees. March 2020 215 rupees. March 2021 860 rupees. Peer comparison and peer companies. Investment rationale. If raw material prices are stable or low, Kanchi Karpuram can make a high operating profit margin of 40 to 50%. With such a high OPM, any increase in sales will increase EPS manifold. Invest in Kanchi Karpuram Limited for long-term appreciation. Share price can give multi-bagger return of 2 times or 3 times in 3 years once this share comes on the radar of institutional investors. As per present shareholding pattern, promoters hold 47.02% and retail investors hold 52.98%. There is hardly any holding of FII or mutual funds.